Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by EEMEA, the region's first and fastest-growing regulated all-in-one trading and investing app. Whether you're looking to invest in U.S. stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, EEMEA puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let EEMEA do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, EEMEA offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the EEMEA app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the detail are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Okay, let's unpack this. The digital world is absolutely buzzing right now. You've got the latest twists in crypto prices, tech giants building their own ledgers, even governments tokenizing bonds. This deep dive is basically your express ticket to understanding the really impactful stuff shaping blockchain, crypto, and yeah, even AI.
Right. And what's truly striking, I think, is just how rapidly this whole landscape is shifting. It's creating, well, both unprecedented opportunities and some pretty critical questions.
Mm-hmm.
So our mission today is really to cut through the noise, look at our sources, and distill the essential insights. We want you to feel truly well-informed, ready to navigate this really dynamic space.
And we're going global with this. We'll dive into everything from, massive market movements, Google's surprising new blockchain.
Yeah, it's a big one.
Crucial regulatory shifts, some really compelling real-world adoption stories, and then innovative things happening in places like Thailand and Dubai.
Quite the scope.
Definitely. Today is August 28th, 2025, and yeah, we're zeroing in on the key stuff from this week, so let's maybe zoom out first. Check the global temperature of the crypto market.
Good place to start.
Right. It's August 28th, 2025, and Bitcoin is, well, comfortably over the $100,000 mark.
Mm-hmm.
Remember just a few years ago, that sounded like pure science fiction, didn't it?
It really did. But here we are. And if we look at the bigger picture, historically, August and September, they haven't always been the best months for crypto prices.
Yeah, the September narrative.
Exactly. Yet this year, it feels a bit different. We're exactly 18 months out from the next Bitcoin halving in October.
Okay.
And that cycle has pretty consistently preceded new all-time highs. Plus, one perspective we saw highlighted in our sources points to the U.S. economic conditions under the Trump administration as looking great.
Right.
Now, that's just one viewpoint. But it certainly fuels some optimism for the market as we look towards the end of the year.
Okay, and looking ahead, there are some dates that seem, well, pretty critical for market watchers. You should probably mark your calendars. September 11th for the next CPI inflation data in the U.S.
Crucial.
And then just a week later, September 17th, Fed Chair Jerome Powell makes that big interest rate decision at the FOMC meeting.
Yeah, those could be really pivotal days for market sentiment, no doubt.
So what's the feeling right now? Investor sentiment.
It's actually quite strong. ETF inflows are robust overall, which signals growing confidence, particularly in Bitcoin.
Despite some Ethereum ETF outflows recently.
Yeah, despite that dip in Ethereum ETS, we're also seeing pretty healthy stablecoin volumes, good 24-hour trading volumes. The global crypto market cap is sitting just under that $4 trillion mark, around $3.97 trillion right now.
Wow. And here's a bit of a curveball, maybe. The partnership between Trump Media Group and Kronos, that's the token linked to Crypto.com.
Ah, yes.
That's generated significant activity. Apparently, one Middle Eastern exchange, BGEX, has even started supporting Kronos. What are the, I guess, broader implications here, seeing crypto exchanges with such direct political affiliations?
Well, it's more than just a curveball, I think. It could signal a whole new frontier in how digital assets interact with, political spheres. It raises some important questions. Things about network neutrality, market fragmentation. Could we start seeing political influence become a direct factor in exchange listings?
Like segmenting the market along ideological lines?
Potentially, yeah. That's a powerful shift to consider. And related to market activity, we're also noting really strong activity in Layer 2 exchanges.
Right, the L2s. Scaling solution.
Exactly. Built on top of main chains like Ethereum, designed to make transactions faster, cheaper. The total value locked in these L2s is now over $157 billion.
$157 billion. That shows real adoption, doesn't it?
It really does. Shows people are moving towards more efficient transactions.
And what about capital allocation? Big money moves.
Yeah, significant capital is being raised, like $1.2 billion and $1 billion by two separate organizations.
Wow.
Specifically to acquire Solana and put it into their treasuries.
So basically betting long-term on Solana's value, holding it as a reserve.
Precisely. It signals strong institutional confidence in its future value and stability. And we're also observing a slight shift in market dominance.
Oh.
Ethereum's dominance is ticking upwards. It's at 14.2%, while Bitcoin's is at 57.40%. This seems driven by a growing narrative around Ethereum treasury firms.
Okay, so firms managing Ethereum reserves or using the network for treasury stuff.
Exactly. It just indicates a maturing market, like more diverse investment strategies playing out.
Okay, so beyond the market numbers, a potentially huge force shaping the future. It's coming from maybe an unexpected corner, a tech giant stepping right into the ledger space.
Google.
Yeah, let's talk about Google Cloud. Building a new Layer-1 blockchain Google Cloud Universal Ledger, or GCUL, full launch expected by 2026.
Right.
This doesn't sound like just a side project. Could be a game changer, right? But what does it mean? A lot of listeners, and me too, are wondering, is Google actually trying to unseat established players like Ethereum or Solana here?
That's a really good question. And, based on our sources, it looks like a pretty clear no to direct competition. At least not in the way we usually think of Ethereum killers.
Okay.
Ethereum, Solana, they're public permissionless ecosystems built for the whole Web3 community, right? Developers, DeFi, NFTs, gaming. Their value really lies in fulfilling those core pillars of open blockchain, being this global playground for innovation.
So GCL is different.
Yeah, GCUL. What's fascinating here is its clear focus. It's aimed squarely at financial institutions.
Okay, so Google isn't trying to attract, like, meme coin traders or NFT artists with GCUL.
Precisely. GCUL is a Layer-1 blockchain purpose-built for the institutions. Banks, exchanges, clearinghouses,
Right.
potentially governments too.
Right.
It aims to provide what they're calling credible neutrality, standardization, and crucially, a compliance-friendly infrastructure.
And the choice of programming language, Python.
Yeah, using Python for smart contracts instead of, say, Solidity or Rust.
Yeah.
That also signals they're aiming at existing finance developers, not necessarily the current DeFi crowd.
Makes sense.
And they're already doing integration testing with this EEMEA group.
One of the world's largest derivatives markets.
Exactly. That's a very strong indicator of this specialized institutional focus.
Okay, that really clarifies Google's strategy. So not a direct competitor, maybe more like a parallel track, giving traditional finance a robust, compliant way to engage with blockchain tech.
That seems to be the idea.
But you mentioned the pillars of open blockchain earlier, and Google talks about institutional neutrality. But coming from a tech giant like Google, how truly neutral can a centralized entity like that really be? Especially when you compare it to a genuinely decentralized network. That sounds like a fundamental tension there.
It absolutely is. It's a core tension. When we talk about those key principles of open blockchain, a major one is permissionless access, meaning no central authority gets to decide who can use it.
Right.
Another is being publicly verifiable. All transactions can be confirmed by anyone, anywhere. So if Google's ledger isn't permissionless in the same way or publicly verifiable like Bitcoin is, it's presenting a fundamentally different model. One where Google, inherently acts as a gatekeeper, doesn't it?
Yeah, it seems like it would have to.
And this ties right back into that historical challenge, the double spending problem, which Satoshi Nakamoto brilliantly solved with cryptography and proof of work. That was the huge innovation making truly open blockchains possible in the first place.
So we'll have to see how Google's project actually balances that institutional focus with the kind of spirit of those foundational ideas.
Exactly. It's a big question mark.
Okay, shifting gears now from big tech to big regulation. The U.S. Commodity Futures Trading Commission, the CFTC, is making a pretty significant move.
Yeah.
They're adopting Nasdaq Q's market surveillance platform, replacing their old legacy system. What's the driver behind this upgrade?
This is really a key development for market integrity. The new tech, it'll provide automated alerts, cross-market analytics, real-time monitoring, basically getting much better at detecting fraud and manipulation. Across derivatives, prediction markets, and digital assets specifically. It's part of a wider push by the agency to modernize their oversight, strengthen market integrity as trading gets more complex.
Right.
And it makes you wonder, doesn't it? Could we see similar moves from the SEC, the Securities and Exchange Commission? Maybe even using AI for predictive threat detection, spotting fraud before it happens.
Interesting thought. Predictive regulation. Now, let's turn to a really powerful, very human story of crypto adoption.
Okay.
Venezuela. It's a truly remarkable story coming out of a Chainalysis report. Their crypto adoption rate has surged. Get this, 110% over the last year.
Wow, 110%.
Yeah, they now rank 13th globally in adoption. What on earth is driving this incredible shift?
Well, what's crucial here, and sadly predictable in some ways, is the direct link to hyperinflation.
Right.
Inflation jumped to a staggering 229%. The local currency fell by 70%. So citizens, businesses, they're increasingly turning to stablecoins like USDT Tether, pegged to the US dollar just for daily transactions.
It's to survive, basically. It's fundamentally a matter of economic survival, yeah? Preserving value in an incredibly volatile environment. The report also mentioned crypto remittances hit $461 million in 2023.
And the political backdrop is intense, too. The Trump administration has been targeting Nicolas Maduro, heavily sanctioning the country. Our sources suggest that political pressure could be another factor pushing people towards these decentralized alternatives.
Plausible.
But there's a fascinating paradox we found here, isn't there?
Indeed there is. While stablecoins like Tether offer this crucial lifeline against inflation, it brings up an important question about those pillars we discussed earlier, permissionless and censorship resistant. Because, as our sources remind us, stablecoin issuers like Tether, they can freeze accounts. They have that control.
And have they?
We've actually seen it happen in Venezuela itself. Tether reportedly froze accounts after the state-managed petro cryptocurrency started accepting crypto payments. Wow, so it demonstrates that inherent tension, right, between a centralized stablecoin, which can be controlled, and the ideals of a truly open, censorship-resistant blockchain.
Exactly. For many people in high-inflation economies, it's this critical trade-off they're forced to make just for some economic stability.
It's stark. And just for context, Venezuela is number 13 globally, behind India at number 1, Nigeria second, and the UK actually at number 12.
Right. Puts it in perspective.
Okay, so from the struggles and complexities in Venezuela, let's pivot to a different kind of innovation. Government and digital assets, this time in Southeast Asia. Thailand.
Oh, yeah, Thailand.
KuCoin, the big global crypto exchange, is supporting Thailand's G token program. What exactly is this? Why is it a big deal?
Well, what's truly significant here is that Thailand's G-Token program represents the world's first publicly offered tokenized government bond.
First ever, publicly offered.
First ever. KuCoin is the first global exchange to jump into the consortium, making it happen alongside Xpring Digital, Six Network, and Krung Thai Bank.
And
The aim is really to democratize access to sovereign debt. Let more people buy government bonds while using blockchain for, transparency, efficiency, and better liquidity. KuCoin's CEO is calling it a global benchmark for financial innovation.
that sounds pretty revolutionary, tokenized government bonds, but it makes me wonder, are they using existing stablecoins for this? Or could Thailand maybe follow Japan's lead, launch its own national currency-backed stablecoin?
That's an excellent question.
To avoid boosting currencies like the US dollar, right?
Exactly. Avoiding the strengthening of foreign currencies would make a lot of sense for Thailand. It's definitely a trend to watch. Now, speaking of innovation hubs, let's turn to Dubai.
Ah, Dubai, always ambitious.
Right. They're rapidly positioning themselves as a leader in both AI and digital assets. You see this ambition in initiatives like their recent $1 million Global Artificial Intelligence Film Award.
Wow, $1 million for AI films.
Yeah, alongside a 50 million dirham influencer acceleration program. These definitely underscore Dubai's vision for the future of the creator economy.
That is a significant commitment. And full disclosure here, I'm personally quite excited about this AI Film Award. I actually release a daily AI-generated deep dive called AI Takeover, using Google's Notebook LM.
Oh, very cool.
Yeah, so this award recognizes fully AI-generated short films, judged on storytelling, creativity, AI integration, execution, and even humanitarian messaging. The top 10 get showcased at the 1 Billion Follower Summit 2026.
Big event.
Huge event, aiming to reach 3 billion people worldwide. And that 50 million dirham program, with partners like TikTok and Snapchat, aims to fund and mentor the next generation of creative entrepreneurs, a real boost for the creator economy there.
Definitely playing the long game.
But connecting more directly back to our digital assets deep dive, Dubai also has major news from Mastercard and Circle, right?
That's right. Mastercard is expanding its partnership with Circle. They're looking to transform digital settlements for merchants and acquirers across the whole Middle East and Africa region.
Okay, transform how? What does this mean practically?
Well, this isn't just about slightly faster payments. It's Mastercard, effectively, crypto-enabling their existing financial rails, blurring the lines between traditional finance and digital assets.
How so?
Merchants and acquirers can now actually settle transactions using USDC and UURC.
USD coin and Euro coin, the stable coin.
Exactly. Pegged to the US dollar and euro.
This is a first for stablecoin settlement in acquiring systems in the Middle East and Africa region. And it's not just the pilot partners like Narrow Finance Financial Services and EZ Financial Services. They're already on board.
So what's the takeaway for, say, a business or a consumer in that region?
The key takeaway, I think, is that major payment networks like Mastercard aren't just adopting stablecoins anymore. They're integrating them as a foundational layer.
Positioning them as the next step for digital cash, not just an alternative. That's the feel, yeah. Mastercard is essentially bridging these blockchain-native assets with traditional fiat commerce infrastructure. The aim is more efficient liquidity and settlement for the acquirers and faster, trusted digital trade for merchants, especially across emerging markets.
And they support others, too.
Yeah, they already support a portfolio of regulated stablecoins, including PayPal's PYUSD. And they're pushing use cases in remittances, B2B payments, gig worker payouts. Circle clearly believes USDC will become as widely used as traditional payment methods.
So a really significant step for mainstream stablecoin adoption in a pretty crucial economic region.
Absolutely.
Wow. Okay, what an incredible deep dive today. We've covered so much ground. From Bitcoin hitting that $100,000 milestone in the shifting sands of global finance, to Google's bold institutional play, those vital regulatory upgrades, and that very human story of crypto adoption down in Venezuela.
Yeah.
And we've also seen how governments and major corporations are really embracing tokenization and AI in places like Thailand and Dubai.
It's a lot happening all at once. And it leads to a pretty provocative thought, I think. As these institutional giants like Google and Mastercard build their bridges into the digital asset world and nations experiment with things like tokenized bonds, will those foundational pillars of open blockchain, permissionless, censorship-resistant, publicly verifiable, will they bend to meet these institutions? Or will we see a completely new, maybe hybrid landscape emerge, one that fundamentally reshapes finance and maybe even creativity as we know it. So the question for you listening is, what kind of digital future are you helping to build, or maybe just navigate, with this new knowledge?
That is a powerful question for all of us to consider. Thank you so much for joining us on this deep dive today. We really hope you feel more informed, maybe inspired, and ready to explore these fascinating topics even further.